Welcome to the deep dive. Today, we're tackling cryptocurrency.
Yeah, it's definitely moved beyond just a niche interest.
For sure, it's cropping up everywhere you see it in financial news, even political discussions now.
Right.
So we've gathered quite a bit for you today, some recent news, mostly from Fox Business, covering, the latest events, and also a really useful cryptocurrency FAQ.
Just to make sure we cover the basics, too.
Exactly.
And our goal here really is to pull all that together for you. We want to kind of connect the dots between the headlines you might be seeing and, well, the fundamental ideas behind how crypto actually works.
Think of this as your shortcut. We want to help you grasp the important stuff in the crypto world without getting totally bogged down in, technical jargon.
Hopefully, yeah, a clearer picture.
Okay, so let's start right at the beginning. What is cryptocurrency, really? The FAQ gives a pretty solid definition. It's a digital currency, right? People often just say crypto. And it uses cryptography for security, operates on blockchain technology.
And Bitcoin is the big one everyone knows.
The household name, yeah. But the FAQ points out there are literally thousands of others.
Thousands, yeah. And the core idea, the really different thing, is decentralization.
Okay, unpack that a bit. Decentralization.
Well, unlike, say, your regular money that's handled by banks or governments, crypto transactions, the records, they're all maintained across a whole network of computers, not just one central server.
Ah, okay.
And that's where cryptography with those complex codes comes in to make sure those online payments are secure.
I see.
And for a lot of people, that's the appeal. This idea that it's decentralized, accessible, maybe harder to censor or control by, one single authority. Some see it as the money tech of the future. Yeah. Because of that.
So this network of computers, the blockchain, how does that actually work? It still sounds a little abstract.
It does, yeah. Think of it like a shared digital ledger book. But instead of one person holding it, copies are held by many computers in the network. And these computers are constantly independently verifying every transaction. When a bunch of transactions are verified, they get bundled into a block.
A block, right.
And that block gets added to the chain of previous blocks. Hence blockchain.
Ah, makes sense.
And here's the crucial part. Once a block is added to that chain, it's incredibly difficult, practically impossible, to alter or delete it. It's meant to be permanent, immutable.
Like carving it in digital stone, sort of? No takebacks?
Exactly, no takebacks. And because the verification's spread out, you don't need a bank or some other middleman to approve things.
Right. The trust is built into the system itself.
Precisely. It fosters trust directly between the people making the transaction. That's a key part of its design.
Okay, that helps clarify the basics. Now, moving to what's happening right now, things get pretty interesting. We're seeing reports that the crypto industry is becoming a real political force, a power broker, even in the upcoming 2026 Senate races.
Yeah, that's a significant development. We're talking millions of dollars being spent. It's not just lobbying anymore. It seems like a concerted effort to really influence legislation, get some political clout.
So they want a seat at the table when the rules are made.
Seems that way. Moving from reacting to regulations to trying to proactively shape them. It suggests they see this as a long-term play.
And speaking of rules and regulations, there's a lot happening there. Mentions of a White House czar looking at both AI and crypto.
Interesting combination.
Yeah. And ongoing talks about pushing forward a stablecoin bill. Plus, Jamie Dimon, the CEO of JP Chase, who, let's face it, hasn't always been crypto's biggest fan.
Not exactly, no.
Is now apparently letting JP clients buy Bitcoin. That feels notable.
It really does. Dimon's move, even if it's just driven by customer demand, it kind of implicitly acknowledges that Bitcoin isn't just going away. It has staying power.
Could cause ripples. Maybe other big banks might follow.
It could, yeah. Maybe not a full embrace, but certainly a recognition that it's part of the financial landscape now. And the fact the Senate is actively debating stablecoin laws, with people like Senator Bill Hagerty involved, just shows policymakers are paying attention.
Then there was this specific bill, the Genius Act of 2025, a stablecoin bill, but it sounds like it hit a wall in the Senate.
That's right. According to Senator Tim Scott, it was blocked by Democrats. He framed it as partisanship above policy and called it a blow to crypto.
So political roadblocks, even when there seems to be some agreement on needing rules.
It really highlights the political friction, doesn't it? Even with something like stablecoins, which, just quickly, are cryptos designed to hold a steady value, often pegged to the US dollar, where you might expect more common ground, the actual details, the politics. It gets complicated. Senator Scott's comments suggest, well, pretty deep disagreements on how to regulate this stuff.
But it's not all gridlock. On a perhaps more encouraging note for the industry, we saw Treasury Secretary Scott Bessent talking about the U.S. needing to be a premier destination for digital assets.
Yeah, and talking about setting up clear regulatory frameworks. That sounds like a supportive tone, at least in principle, from a key government player.
Recognizing the potential, maybe.
Exactly. It signals that the Treasury sees the economic possibilities here and understands that clear, supportive rules are needed to attract investment and innovation. But, well, as Senator Haggerty also mentioned regarding that stablecoin bill, even things that seem to have bipartisan backing can run into trouble, these snacks, once they start hashing out the specifics. It's never simple.
Fair point. Okay, let's shift away from Washington for a moment. We're also seeing some interesting moves in adoption and investment, like Abu Dhabi reportedly investing $2 billion in Binance.
And using a stablecoin called USD1, described as Trump's stablecoin.
Right. And also figures like Miami Mayor Francis Suarez being very public about his crypto involvement.
Yeah. These examples really show the global reach now, don't they? And how crypto is getting woven into bigger financial strategies, even local government economic plans like in Miami. That Abu Dhabi investment is serious capital.
Definitely. But there's a darker side emerging too, it seems. Reports of rising threats, even kidnappings, targeting crypto executives, leading them to beef up personal security.
Yeah, that's concerning.
And then this cyber attack on Coinbase, potential costs up to $400 million, though Coinbase apparently said they are not paying any ransom. Still, that's alarming.
It's a stark reminder of the risks, isn't it? When assets become valuable and visible, they attract crime. It puts huge pressure on exchanges like Coinbase to have top-notch security, and the threats against individuals, that shows how high the stakes are getting.
It's not all doom and gloom on the market side, though. We saw crypto stocks jumping when Bitcoin briefly went over $100,000. Some link that surge to President Trump's UK trade deal, interestingly.
Yeah, the market is definitely reactive. It shows how crypto is getting more connected to broader global economic news and political events. It's not operating in a total vacuum anymore.
And leaders at that Consensus 2025 summit in Canada sounded pretty upbeat, expressing optimism about legislation down the line. So quite the mixed bag of news.
It really is a dynamic space. That optimism from industry leaders probably comes from a belief that, well, their increased political engagement and maybe a better understanding of the tech by lawmakers will eventually lead to clearer, more favorable rules. They hope so, anyway.
So, okay, someone listening might be thinking, all right, I'm following this, but how do I actually buy some crypto if I wanted to? The FAQ touched on buying and storing it.
Right. There are basically two main paths. You've got your centralized exchanges, think Coinbase, PayPal, places like that. They're often user-friendly, but you usually need to provide ID, personal info.
Know your customer rules, KYC.
Exactly. Then you have decentralized exchanges. Uniswap is an example. These let you trade directly, peer-to-peer, often without needing to hand over as much personal data. Maybe a steeper learning curve.
And the FAQ mentioned price swings. Timing is important.
Very important. Prices can change incredibly fast. It's not like buying stocks during market hours, necessarily. It's 24/7 and can be volatile, so timing your entry point is something people think about a lot.
And once you have it, where do you keep it? Is leaving it on the exchange safe?
Well, the FAQ recommends, for better security, moving it off the exchange into your own personal wallet.
Why is that?
Because exchanges themselves can be, and have been, targets for hackers. A personal wallet gives you control over your private keys, the secret codes you need to access your crypto.
Are there different kinds of wallets?
Yeah, mainly hot wallets, which are connected to the internet, like software or mobile apps, and cold wallets, which are offline, usually physical devices like a USB stick. Cold wallets are generally seen as more secure because they aren't constantly online.
Gotcha. Okay, so it's not just about buying and holding, hoping the price goes up, is it? Are people actually using crypto for things?
They are, increasingly so. It's still developing. But the FAQ notes more businesses are starting to accept crypto payments.
For what kinds of things?
All sorts, really. Real estate deals, sometimes stocks, travel bookings, online services. It's definitely broadening. The general expectation is this trend will likely continue as people get more comfortable with it.
Okay, so let's boil it down. For someone considering getting involved, maybe investing, what are the big pros and cons according to the FAQ?
Right. The main potential upside mentioned is the chance for rapid price growth. Because it's still relatively new as an asset class, there's that getting in early
It's
potential.
the potential for big returns.
Potential, yes. But, and this is but the FAQ strongly emphasizes the flip side. Extreme volatility. You could lose money just as quickly, if not quicker. It's very risky.
Okay, high risk, high potential reward. What else?
Security. It's flagged as a major concern. You absolutely need to take steps to secure your crypto and your transactions. Because if it's stolen, getting it back is often impossible. Fraud is also a risk you need to watch out for.
Right. So to kind of wrap up our deep dive here, it seems clear cryptocurrency is this decentralized digital thing. It's definitely moving out of the shadows and into the mainstream. We're seeing more actual uses, and it's clearly becoming a factor in politics and finance.
Absolutely. But, as we've discussed, it's definitely not without its challenges.
Yes.
Significant risks, security worries, and this whole regulatory picture is still very much being painted.
Yeah, it's complex.
It is. So we've gone from the basic what is it and how does it work, right through to the latest news, the politics, the market ups and downs, the security issues. Hopefully, navigating all that gives you a clearer, more efficient handle on it all.
We hope so, too. And maybe that leaves you with something to think about. As we see crypto weaving itself more and more into our existing financial systems and even into political campaigning and policy, what kind of fundamental changes could that lead to down the road for banking, for finance, maybe even for how governments operate?
It's a big question.
Definitely something to keep an eye on.